Hi everyone. Let's take a look at problem P2-2A, where we're asked to prepare the financial statements of Drew Corporation, and we have some account balances in front of us. Okay, now I'm going to illustrate how I solve this using a worksheet approach. So let me bring a couple things to light. I'll bring some color into some work that I've done ahead of time to make this go a little bit quicker in the demonstration. Okay, now all of these accounts that you see here in dollar amounts, I've listed in one column below. So let's scroll down and I'll show you how I've listed those. Okay, let's just bring all of these to light now. Okay, now I put them under one column, the debit column, and that's only because I wanted them in one location to begin with, but we need to move it to the correct balances. Now, all of these were just copied from above in the problem. Okay, if we've got a retained earnings balance that is a positive number, we know that needs to be a credit. So let's go ahead and move that. Utilities expense is a normal debit balance. Equipment is a debit. An asset account, accounts payable, is a credit. Cash is a debit. Salaries payable is normally a credit, right? Liabilities are credit, so let's put it to the right column. As we will also put common stock there as well. Dividends normally is a debit account. It's a contra equity account. Revenue has a normal credit balance. Prepaid insurance is an asset, so it's a debit balance. Expenses also are debit balances. All of these are debit balances, and accumulated depreciation is the one exception now. Let's make that a credit balance. And it appears that they've given us some amounts that are out of balance. I see one typo. Let me take care of that. Let me take care of that first. Okay. Also, let me underline these so we understand that those are titles. Alright, now, so let's just go through the accounts and drop in the income statement items and drop in the balance sheet items where they appear. And let me center this a little bit. Okay, now keep in mind we're still going to use debit and credit columns, so I'll drop that in as well. Okay, let's do the income statement first. Utilities expense, normally a debit account, so all I've done is use put a formula in to say put in the same value here that you have in cell B28. So now I'm going to copy that down to any other income statement item. And what this requires is that you understand by the title of the account whether it goes on the income statement or the balance sheet. Okay, now service revenues is a credit, but it does go on the income statement. Repair expense, depreciation expense, insurance expense, salaries expense, and I think that's it. So now if we post some titles here, we're going to get a difference between one and the other. Let me see if I've got everything that I expect on this one. Okay, I think we've got everything. So let me just write in net income here. I'll show you how a worksheet can help you. And if I take equal the 82,000 less the 62,500, that would be the credits versus the debits, and in this case it's revenue less expenses, then that difference would be net income. And then I should be able to put a total here. And I should be able to sum these two items. You can underline this. I'll just drop in a 0 here so that we get an underlined amount and copy that over. And so there we have the two amounts that balance. And proper formatting would say we would format this, make it a number, go to the font and make the underline double accounting. So Let me show you what I've done there with the format cell. Okay, and then we get the double line below. Alright, I do see one problem with a typo from the information. Let me slide back up and show you that. The repair expense is supposed to be $1,800 to the left of my mouse. So if we slide back down now and change that to be $1,800, okay, now we see that these totals balance, and I'm just going to format this. Okay, and that's correct now. The debits equal the credits. That looks much better. And the net income then will change. Since that's $1,800, the total expenses are $46,300. The net income goes to $35,700, and we're in balance. Okay, now let's drop in the balance sheet items. I can take that, copy that there. Equipment would be from there. Alright, now let's do the debits first. Cash. Dividends is a funny one. I think I'm going to show it on the balance sheet for now, but that's one we actually have to think about. Prepaid insurance, and I think we've accounts receivable. Now we've accounted for all of those. Now let's do the credits. I'll copy from here. Accounts payable shows up. Salaries payable is a liability. Common stock goes in owner's equity on the balance sheet. We covered everything. Expenses. Oh, accumulated depreciation goes right there. And let's see if we balance. These are sums, so I'll just copy here. We should be off slightly. Now, if we've done this correctly, we should be able to take that 113 minus the 79 and equal the same dollar amount, then copy, and you'll see that we're in balance. And we are. Okay, I'll put in a 0 again, just to underline these. Okay, now you see the value of a worksheet approach. It allows you to stay in balance, and at the same time it gives you a number that could be your net income. Okay? Now from here, what we've done in terms of preparing an income statement, a retained earnings statement, and a classified balance sheet is we've identified which accounts go on which items. Now there are some exceptions because we have to put together the retained earnings statement, and the retained earnings statement requires a couple items on the balance sheet column to be addressed. Okay, now I'm not going to prepare the income statement and balance sheet statements in front of you. It'll take too long. You need to put a title on. You need to, you start off with putting the service revenue and then the various expenses. But rather than walk you through that step, I'll show you how these numbers will appear on the final statement. Okay, the first statement we put together is the income statement. Now, you should start off with the title. Okay, now all I've done is I've moved to another page in the worksheet, so I know the screen blinked on you. So we put Drew Corporation, the income statement, since it covers a period of time we write for the year ended December 31st, and then we drop in all those dollar amounts that appeared under the income statement column. Couple things to notice. The service revenue appears under the revenues category, and the expenses are listed in decreasing dollar amount order. So salaries expense was the largest amount, repairs expense was the smallest. This is typically the way income statements are done. We put a subtotal and we get to $35,700, and of course that $35,700 matches what we computed for net income that appears right here. Okay, once we have that put together, we have to put the retained earnings statement together. And here we can't use the worksheet at face value. We start off with retained earnings, which was the beginning amount, right? That amount right there. And then we've got to figure out what happened. Was there any changes in common stock? We don't know if there was, so we assume there weren't any. But we do know $12,000 of dividends were declared and probably were paid. And the reason I say that is because there isn't a dividends payable on the balance sheet. So, back to our statement, we show the addition of the net income that increases retained earnings, and then we back out the dividends and we calculate a retained earnings amount. Now, once we have that, we can go over and prepare the balance sheet, and we should be able to prepare everything except that retained earnings because that's a beginning of the year amount. So let's take a look at the balance sheet and see if these numbers appear. Okay, there's cash 17.9. Let me step back. There's our cash amount 17.9. And we can simply go through these and find everything else. Accounts receivable 14.2 is probably next. We have 14.2 in prepaid insurance. Now, this time it's coincidence that these numbers are in decreasing value. Normally, the current assets are listed in order of liquidity. So the item cash appears first, and then the items that are most next. Let me say this the right way. The items that will be converted into cash next in order usually appear. So we see the current assets appearing in order of liquidity. Okay? A subtotal on current assets, equipment less the accumulated depreciation. We had that here. Here's our equipment amount, 66,000. Our accumulated depreciation, 17.6. And we're assuming that's on equipment since we don't see any other long-lived assets. Another subtotal and a total. Now we drop in the current liabilities and the stockholders' equity amounts, again, coming from our worksheet if you choose to do it that way. Worksheet is not a formal financial statement, but it is a tool that helps you assemble the items in the right areas. And the only thing we have to remember is that 54.7 comes from the ending amount on the retained earnings statement rather than from the beginning amount right here. Okay, and when we're done, our assets should equal the liabilities, the $84,000 amount, which, by the way, won't necessarily agree to the worksheet amounts because we've got a netting effect going on with the dividends versus the retained earnings. So we're netting these. And we are able to get the balance sheet to balance, which means we probably put all the financial statements correctly. Okay, I'll go back to the worksheet, and I hope you found this beneficial. Thanks, everyone.